What is a mortgage? A mortgage is a type of loan used to purchase or maintain a home, land, or other type of real estate. The borrower agrees to pay the lender over time, typically in a series of regular payments that are divided into principal and interest. The property then serves as collateral to secure the loan. A borrower must apply for a mortgage through their preferred lender and ensure that they meet several requirements, including minimum credit score and down payment. Mortgage applications go through a rigorous underwriting process before they reach the closing phase. Mortgage type vary based on the need of the borrower, such as conventional and fixed rate loan. How mortgage work? Individuals and businesses use mortgage to buy real estate without paying the entire purchase price upfront. The borrower repays the loan plus interest over a specified number of years until they own the property free and clear. Most traditional mortgages are fully amortizing. This means that the regular payment amount still stay the same, but different proportion of principal versus interest will be paid over the life of the loan with each payment. Typical mortgage terms are for 30 or 15 years. Mortgages are also known as lien against property or claims on property. If the borrower stops paying the mortgage, the lender can foreclose on the property. For example, a residential home buyer pledged their house to their lender, which then has a claim on the property. This ensures the lender interest in the property should the buyer default on their financial obligation. In the case of the foreclosure, the lender may evict the resident, sell the property, and use the money from the sale to pay off the mortgage debt. The mortgage process. Would-be borrowers begin the process by applying to one or more mortgage lender. The lender will ask for evidence that the borrower is capable of repaying the loan. This may include bank and investment statement, recent tax returns, and proof of current employment. The lender will generally run a credit check as well. If the application is approved, the lender will offer the borrower a loan of up to a certain amount and at a particular interest rate. Home buyers can apply for a mortgage after they have chosen a property to buy or while they are still shopping for one, a process known as pre-approval. Being pre-approved for a mortgage can give buyer an edge in a tight housing market because seller will know that they have the money to back up their offer. Once a buyer and seller agree on the term of their deal, they or their representative will meet at what's called a closing. This is when the borrower makes their down payment to the lender. The seller will transfer ownership of the property to the buyer and receive the agreed given sum of money, and the buyer will sign any remaining mortgage document. The lender may charge fees for originating the loan at the closing. Option. There are hundreds of options of when you can get a mortgage. You can get a mortgage through a credit union, bank, mortgage-specific lender, online-only lender, or mortgage broker. No matter which option you choose, compare rates across type to make sure that you are getting the best deal. Type of mortgage. Mortgage come in a variety of form. The most common type of 30-year and 15-year fixed-rate mortgage. Some mortgage terms are short as 5 years, while others can run 40 years or longer. Stretching payment over more years may reduce the monthly payment, but it also increases the total amount of interest that the borrower pays over the life of the loan. Within the different term lengths are numerous types of house loan, including Federal Housing Administration loan, U.S. Department of Agriculture loan, and U.S. Department of Veteran Affairs loan available for specific population that may not have the income, credit score, or down payment required to qualify for conventional mortgage. The following are just a few examples of some of the most popular type of mortgage loan available to borrowers. Fixed rate mortgage. The standard type of mortgage is fixed rate. With a fixed rate mortgage, the interest rate stays the same for the entire term of the loan, as do the borrower's monthly payment toward the mortgage. A fixed rate mortgage is also called a traditional mortgage. Mortgage lending discrimination is illegal. If you think you have been discriminated against based on race, religion, sex, marital status, use of public assistance, national origin, disability, or age, there are steps that you can take. One such step is to file a report with the Consumer Financial Protection Bureau or the U.S. Department of Housing and Urban Development. Thank you.